In today's video, we answer the question, what is options trading? These special broadcast videos replace our normal live opening and closing bell shows, as it is my vacation time, or as we say in the UK, time to go on a holiday, sit on the beach and have an ice cream. But we are going to premiere these videos at the normal times of the opening and closing bell, and hopefully you'll join in for the live premieres and be part of it each time. Now, I will try and pop in on in the live chat as it premieres and update with stocks and shares and what's going on, and make sure everybody is here doing all the normal stuff like smashing the like button. Make sure that you smash the like button. I very much look forward to seeing you back when I return. And also, don't forget to subscribe if you've not subscribed to this channel before. And now on with the rest of the video. So, what is options trading? Are you able to options trade? Is it a good idea? Well, we'll discuss that in today's video. Whether you can options trade or not depends on your account with your brokerage and whether they allow you to options trade. Whether you should or not is another question for another video perhaps. But options trading is essentially this. If I decide to buy a piece of the pie, I wish to buy one share of Tesla. I have bought the stock and I own the stock. If the stock goes up, it goes down, I own it, I own the profits, and I own the losses. Simple as that. With options trading, what I'm doing is I can bet, and I do call it a bet because it is betting. You are investing in a stock, but you're also betting a bit because you are predicting that a stock will go up by a certain amount by a certain date, or go down by a certain amount by a certain date. So how do you get into options trading? Well, your brokerage have to offer you that facility, and that will depend on your account and your status with your brokerage. But if you've decided and you do have the facility to get into options trading, what you have to do, regardless of any position, is you need to buy a contract. A contract is 100 shares of a stock. So in Tesla's case, that stock was $1,000 a share recently, and it did a stock split, and we'll talk about stock splits in upcoming videos. You'd have to spend $100,000 to buy a contract of Tesla to be able to options trade. And then what you're doing then is you're buying a piece of the contract. You're buying a contract whether to buy or sell the stock at a future price, but not obliged to. So you don't have to buy it. But then, of course, if you don't buy it, then you can lose the contract price. So if you wish to get into contract options trading, you got to be looking to buy 100 shares of something. Now, you don't have to buy the 100 shares of Tesla, for example, because that's very expensive. You can just buy the contract, and then you can see where your position is when it's time for the contract to expire, or you can execute it before it expires. It's up to you. But essentially, in a nutshell, option trading allows you to buy a stock at a predetermined price in the future on a certain date. And that doesn't mean to say that price is going to happen. It doesn't mean to say that, it doesn't guarantee whether the stock goes up or down, but it enables you to kind of get in on a stock at a predetermined price, and then you can execute that trade or not. So you're not obliged to pay for to buy the stock, but of course then you would lose the contract. So options trading, in my book, is very, very risky, especially done with margin, because not only are you predicting a direction of the price, you're also predicting an amount and a date. And of course there are variations in between when you can either let the contract expire or get rid of it or whatever you want to do. You're not obliged to buy the stock. But for me, options trading isn't for me right now. I'm still considering it, but it's very, very risky, and especially if you use margin to do options. But at the same time, it can also protect you because you can get some exposure to a stock by buying a contract and then seeing it didn't play out the way you wanted it and let the contract go. You didn't have to get in and buy 100 shares of Tesla, for example, and then the share price went down. It gives you a bit of flexibility. So on one hand, it is risky. On another hand, it can limit your exposure as well. So it can go both ways. But Options trading is a very complex subject. It's not my field of expertise, but I was asked to answer the question in the best way possible. So this is my opinion on options trading, and right now it's not for me. For the next video in the series, make sure you click up here and join me for another live premiere until I return from my holiday. So I hope you enjoyed the video. I very much look forward to seeing you back live again. Did you leave a comment below the video? Did you engage in it on the live streamer? Hopefully you did. And did you remember to like the video? Very, very important. And if you did enjoy this video and you would like to highlight your comments below, you can actually click here underneath the video and leave a comment and do a super thanks if you want to highlight your comment. I very much appreciate you doing that, and it will highlight your comments and I will reply to everyone's comments. I very much look forward to seeing you back on October the 31st. Until then, thank you very much. Take care of yourselves and each other.